Hello and welcome to our webinar, How to Detect and Prevent Fraud with Real-Time Data-Driven Decisions. Let's welcome our speakers today, SafePaaS CEO Adil Khan. We're excited today to have Certified Fraud Examiner Prashant Naik here with us, as well as our guest speaker. Welcome, Prashant.
Thank you.
So, Adil, if you'd like to kick off the webinar.
Yes, thanks everybody for attending our educational webinar, a series that we do every month, and look forward to the session today with Prashant. I'm really excited about some new ways on how we are helping together with Prashant, our clients, get more out of their investment in their processes, their technology, and so forth. So I'll get directly into the first portion of the agenda, which is introductions, and then we'll talk a little bit about Prashant's expertise in this area. What are some of the trends he's seeing in the market, especially around cybercrime? I know the fraud's been a topic around for a very long time, as long as business has been around, but there are some new trends and issues that are pressing and require attention from management and auditors in the current times. We'll talk a bit about best practices based on, again, some of the stories and case studies that Prashant can share with us. I'll talk a little bit about the data-driven decisions and how SafePaaS can help you implement some of those best practices, leveraging the investment we have made for our clients in the decision-making process around risk. And then we'll do a quick case study of a client in New York that I worked with and helped a few years back, and so we'll discuss some of the lessons from the field, if you will, and then time for Q&A. So with that, Prashant, welcome again, and please give us a quick background.
Sure. Thanks, Adil. Hello, everyone. So I've been in the internal audit and risk management function for the last 18 plus years out of my total over 25 years of work experience. Have worked with various industries and sectors, basically manufacturing, construction, real estate, service industries, property management, retail. And most of these are part of my work tenures with large corporate houses in various countries. So my initial years of work life was in the line function, and that gave me a lot of insight into management activities. And when I moved into the internal audit function, that was a great help. And I used those insights to add value to the business through the platform of internal audit and risk management, which is one of the greatest platforms that I believe one can have to realize the potential that you can bring to the business.
Excellent. Okay.
And coming to fraud, I've realized that.
Sorry, I lost you there.
Yeah, sure. Okay, yeah. So with respect to fraud, I have basically realized that to basically combat fraud, you have to understand the business, and that is where understanding the business and the way it works and what are the challenges that management faces. Those are the areas where you start off from, so that you can really be effective in combating fraud for the organization. So we'll discuss these things as we progress into the webinar today.
Okay, thank you.
Yeah, Adil.
And you pretty much know about us. So SafePaaS has been in this space for a very long time. Governance, risk and compliance, information security, and so forth. So we've been rated by Gartner as one of the most complete solutions. We're actively participating in events hosted by professional organizations like ISACA, IIA, as well as industry organizations like Oracle, SAP, etc. If you are in Europe, please look us up in Geneva. We're sponsoring the ISACA European event on October 16th through 18th, and we look forward to seeing you there if you're out in the area. About 250 customers across major industry segments. So chances are that if you're running into a pain point that between Prashant, ourselves, and Emma, we can get you some good examples of how customers are dealing with those situations. Again, a vast group of knowledge among the team here. A little bit on our background. We'll discuss it in more detail around today's topic, but keep in mind that we're talking about fraud, so it's more about SafeSight or Safe Insight, which includes a number of analytics tools that folks like yourselves and partners like Prashant use to identify risks, including fraud risks, and then help implement controls, including controls monitoring and so forth, which come back to the audit risk and compliance requirements that we'll talk about today. So with that, Prashant, if you can kind of give an idea, what are you seeing in the market? Maybe give share some stories with us.
Sure. So, so the trend in fraud seems to be increasing. I mean, there has been a lot of awareness in the area of fraud, and companies and CEOs and the boards are all gearing up to understand the nature of fraud, and especially in the age that we are in today with respect to the growing connectivity within organizations and within markets. It is but natural that the nature of crime also has evolved, and as such as a survey that was run by PwC in 2018, it basically said about 49% of the organizations globally have been a victim of fraud, and importantly, this is what got reported, and that also means that either the 51% of the organizations did not know that they were a victim of crime, or they had enough controls in place to prevent fraud. But again, knowing the nature of fraud, it is just impossible to eliminate the risk of fraud, and that typically comes to me, having been in this industry for the last 18 years. What comes to my mind is fraud, though has evolved, it has always remained a constant in business, and predominantly it has remained a constant in business because the business always involved humans, and as humans, we exist with an inherent defect within ourselves, and that's the element of greed within humans that makes us commit fraud. And I would say, I mean, I would say that it is just a time and an opportunity that presents itself for us as humans to look at fraud and perpetrate it. So there are areas where we need to be aware of and try to avoid those losses. So one of the findings also was that the cost of fraud, each case of fraud was an average $1 million, and that's a sizable amount of money when it comes to losses to organizations. Interestingly, when fraud happens, 52% of the frauds are perpetrated by the people within the organization. Now that's an interesting concept also, because the controls that are within the organization are managed by people, and hence what I also see as a trend is that technology will enable automated compliance, okay, automated controls, okay, and what will happen in the days to come is basically technology will help us reduce these incidents because of human involvement. Okay, but however, I do not ignore the possibility that fraud will always continue to be a part of the business. In terms of cybercrime, I guess I'll share with you quickly later in the next slide, I guess, on one particular type of a cybercrime. But cybercrime is increasing, and that's changing again, as I said, the face of fraud. And this is where I would say even though we lay out the best of controls, we lay out the best of practices to fight fraud. Fraud will always find its way, and it will find its way through human ingenuity, and it will always evolve at every step of the way. Yeah, yeah. So as I was saying, Adil, one of these cyber crimes that I was part of the investigation team in one of my work lives. So this was a whaling attack, and which pretty much was a crime where the cyber criminals targeted somebody like the CEO and the CFO. And in the way they did it was they wanted them to unknowingly give up some information about themselves, about the company. And the way they would do it, interestingly, would be that they would send the CEO or the CFO. Now, these are the whales in the corporate world. So they would send the CEO and the CFO an email, which basically looks very legit. It looks very harmless and comes from somebody that they know. And the hope that this cyber criminal has is that these guys will open up that email and then they will be able to install their malware into their computers. Now, in this case, that what happened within the organization was that this case came to light only after an incident occurred in the business, and that's when we came to know that the CEO's emails were compromised. And one day, the CFO receives an email from the CEO, and CEO asks him that to the CFO that we have just signed a contract with one of our vendors, and before you send off the advance payment, make sure you send it to the new bank account. Now, and the email gives a new bank account. So the CFO pretty much is busy that day, and he does not respond immediately. But when he does not respond, the CEO again sends an email. Now this is the cyber criminal sending that email on behalf of the CEO, and it goes back to the CFO saying, "Why have you not remitted the money yet to the supplier, to the vendor?" And this is where the CFO basically kind of is in a dilemma. And if he was not an alert CFO, he would have, in all probability, effected the payment because the CEO was pressurizing him. But then the CFO was aware, and he brought this to the attention of the Internal Audit department. And then he also had the interest to check up with the CEO and verify whether he was really pressurizing him with the request to send it to a new bank account number of the vendor. And that is when we realized that the CEO had not sent those emails, and pretty much the CEO's mails being compromised, the cyber criminals were able to pose themselves as the CEO and send instructions within the organization. Now that's a fantastic way of how cyber criminals work in today's day. And until and unless we as management are aware, okay, of how fraud can take place in our organization, okay, we would be very vulnerable to such frauds that happen in our company. Having said this, I would basically then look at how internal audit can play a role in preventing such frauds, and setting some guidelines around social media about sharing personal information, and not sharing sensitive information to people the CEOs or the CFOs do not know, and trying to create such awareness within the senior management.
Right.
So let us, be aware and try to create that awareness.
Okay, Prashant. So that's a really good overview of, kind of increasing pressure and growing fraud. And your example that you just provided really solidifies that in our mind. We've all heard of, this type of cyber crime that goes on And there are many stories that we read about in the paper too. So this is not new to us, but the fact you've been in the trenches and actually helped clients deal with these issues really brings that credibility and real world knowledge that that would really be beneficial to our customers together. So with that kind of a background and overview, could you tell us a little bit more? Where should a company start? What are some of the best practices? What do you do for companies that have been either a victim of fraud or concerned about fraud and these growing trends around fraud based on your experience? So we have a little session on best practices. We'd love to hear from you as the industry.
Yeah, that's a great question. Yes, sure. And as you have rightly pointed out here, one of the best ways to get into understanding the risk of fraud is to carry out a fraud risk assessment. And one of my findings, Adil, in my years of experience is this is one of those rarely done assessments. Companies tend to do a strategic risk assessment, business risk assessment, operational risk assessment. However, when it comes to fraud risk assessment, typically corporates and people shy from doing such a risk assessment. I would say that there are two reasons for this, why they would do so. First is that the company has a culture within themselves that discussing fraud in the boardroom, discussing fraud in the excom is something like a taboo. It's an uncomfortable event to discuss fraud as a word. And the moment you bring the word fraud to the table, everybody shuts down. So that is something which needs to change. And the second thing that I've also seen is the oversight role that is played by the audit committee and the risk committee, where they question the internal auditors, chief internal auditor, on how the evaluation of anti-fraud controls are. That also is not a very effective mechanism. So these two, in my mind, would be one of those important areas that as a chief audit executive or audit department should bring to the table in terms of improvising the culture of the business of the company towards an anti-fraud culture. And second, also work with the enterprise risk management team, the ERM team, to ensure that the FRAs are done regularly. And I would say especially when there has been a lot of change to processes in the company or to organization structures, or the business has gone through restructuring, or there have been new implementation of technology and so on. So that is when it is very important to conduct fraud risk assessments. From the internal audit side, I would say the internal audit planning process should include fraud risk auditing as a part of their audit plan. And I would not say that you have an actual audit called fraud risk auditing. No, what I would rather put it as, you embed that fraud risk auditing within a critical process that you want to evaluate a fraud risk in that particular process. So you embed that fraud risk test within the internal audit of that particular process, and then deliver that audit. The other thing which I think in terms of best practices and identification of red flags, the way you can identify red flags are by ensuring that the right checks and balances are in place. So example, in terms of red flags, the best ways to identify red flags are through external auditors. Okay, they are one area who can identify fraud. Internal audit is another area. Implementing a strong code of conduct within the company and ensuring that a code of conduct is being circulated and cascaded down to the business is an important one. Management reviews. One important area that I think is very, very important is whistleblowing hotlines. So implementing a effective whistleblowing hotline and ensuring that it appears as an independent whistleblowing hotline is very important. So whether you run it within your company or you run it through a third-party service provider, it is important that the whistleblowing hotline seems independent to the management. So these are various areas, I would say, some of the best practices that we could consider for management and internal audit to look at when they are combating fraud.
Thank you, Prashant, for that overview and basically an approach that a company can take on, whether they have a fraud program in place, they can assess the risk and make improvements, or if they're looking to start a program. These are some great, real-world, field-tested, battle-tested ideas that we concur with. Now, one thing that puzzles our customers is that, in this day and age, why do people even attempt to commit fraud with all the, oversight and audits? So can you talk a little bit about, we saw in the earlier stats that 52% of fraud is done by the insiders. And I thought this slide was kind of interesting, but I'd love for you to share some of your experiences on why people commit fraud and what to look for.
Sure. So Adil, fraud actually has fraud happens when these three components come in place. So there is an opportunity to commit a fraud, and then there's a pressure to achieve results, and that's where the employee or the supplier or the customer commits fraud. And then once they commit the fraud, there is always this rationalization of why you commit the fraud. Now, why each person would or individual would commit a fraud? I would simply come to the fact that it is human nature. And again, when I say this human nature, I come back to my first statement, which is the human greed, the element of human greed, which is inherent within all of us. In spite of all the checks, balances, technological advances, awareness campaigns, all after having all those regulatory compliance requirements, anti-bribery laws, all this put together, this remains one of the best explanations why somebody would commit fraud. I'll give you a small example on this fraud triangle. So take an example. Today's day and time, management is faced with a challenge from the board all the time and from the shareholders to do more with less. Now, when you say do more with less, automatically it puts a pressure on your resources, on your people resources, on your money resources, and so on and so forth. And that immediately comes to effect through a reduction in the workforce. And when reduction in the workforce happens, there are controls, manual controls, which are done by people. And when people leave, they take these controls along with them. Now, what happens, Adil, is that if we do not have compensating controls, if we do not have technology-enabled controls, okay, you tend to lose this important piece of check and balance. Okay, and then you have this pressure that is on you to deliver the results, to deliver the bottom line, and then you have to just basically the people rationalize that when we don't have resources and we have the pressure to achieve results, this is where I have to then resort to fraud. I resort to ways and means to deliver results which may be fraudulent, and so on and so forth. And then automatically each one of us goes down the slippery slope. So this is where I think this is what happens when people are put under these three elements of pressure, opportunity, and rationalization, and they end up committing the fraud.
Okay, well, thanks for sharing what motivates people to do it. And you've previously talked a little bit about the kind of an approach on how to implement. Now we want to drill down a little bit more, that we understand people's motivations, taking a high level approach. What do you recommend companies actually do to start off a anti-fraud control program? If you can talk through that and give us some insight.
Yeah, right. So going through an anti-fraud program, I would believe that should be an all-encompassing framework and a control program that involves all the stakeholders to basically be involved in fighting fraud. So what basically should happen is that the anti-fraud framework that is established by the business should effectively be reducing the occurrence of fraud. So as part of the internal audit's work, they should also be able to showcase that the anti-fraud framework is effective when they audit the effectiveness of the anti-fraud control program. The other thing that we should ensure that this anti-fraud control program is not only applicable to employees, but should also include suppliers and customers. So it should include all the stakeholders that are a part of the program, and it should kind of provide an guidance into what is fraud, what are unethical acts. Okay, so people become aware of what comprises of unethical practices. The other important thing, Adil, is and I would say very important, is defining a tolerance policy to fraud. Okay, what is the company's approach and appetite to fraudulent events? Okay, and especially when you have to put up a dollar amount to a tolerance limit. So that is important. The other thing that the fraud program should also do is put together the roles and responsibilities of each of the stakeholders, the board, the management, the employees, and so on and so forth, so that when the roles are set up, each one of them plays their roles in line with the 3 lines of defense that we typically follow when it comes to management being the first line of defense, and then the control functions being the second line of defense, and internal audit and external audit being the third line of defense. So that the achieving the objectives of the anti-fraud program is thoroughly captured through various practices of preventive controls, detective controls, and adequate response strategies to fraud. So I think that's the way to approach the anti-fraud control program.
Excellent. Okay. Well, let's take a look at some examples of a process that I understand gets audited the most around fraud risks, which is your procure to pay cycle. And you cited some examples about motivations when there's more pressure from the board, you're looking to perform, and we're all thinking about when's the global economy is going to be in the next recession. If there's part of the capital markets. So there's planning we could be doing now to improve our procure to pay cycle. If we haven't gotten that area beefed up, what are some of the areas, and specifically around the procure to pay cycle, which is how the cash leaves the bank, where you could make some suggestions for our listeners to basically get value out of this webinar and go back to their desk and start preparing for the next opportunity for fraud, as you said.
So great question. So as part of the nature of procurement activity, it's an inherently risky activity for fraud to perpetrate in that function. And what I've seen, Adil, is that most of these risks could be avoided through implementing technology controls. Okay, and if we do that, pretty much, unless there happens to be collusion outside these controls, okay, you will tend to see a lot of leakages within the procurement function. I'll just cite 2 quick examples on procurement fraud when this happens, where it goes outside the system, and one of those areas is in area of conflict of interest, where the company runs a declaration of conflict of interest annually. Take an example of this, and they have the employees declaring their conflict of interest. But what happens is, most of the times, this conflict of interest declaration is manual, and that does not act as an effective control mechanism. So if we were to automate this this compliance conflict of interest declaration, when the purchase decision is being made, this conflict of interest can be flagged up at that same point when the decision is being made. And if you find that the purchase officer or the person who is actually approving the purchase transaction is conflicted, so you could avoid that conflict of interest at the time of taking the decision and not subsequently. And that when it happens subsequently, the loss has already occurred, and there is no way of seeking alter corrective measures once it has happened, because you have already committed the organization to the vendor. So that this is something which I believe through technology could be one of the important areas. The other thing to bypass all these controls is, I've seen this happen time and again, is where the purchase managers showcase purchases as emergency purchases through a false sense of urgency, and then they pass off these purchases to a preferred vendor or a single source which they want to favor. Now, if we had data analytics around this on a timely basis, okay, what would happen is we could again prevent such a scheme from perpetrating, and or if it is perpetrated, it can actually get detected immediately. You could identify such frequencies of emergency purchase. You could analyze it by supplier, which supplier is getting the most volume of purchase, or by buyer who is actually committing the company to the emergency purchase. So those things can flag up immediately if we have automated controls around purchasing.
Excellent. Okay, well, that's a really good overview of some best practices. Why companies should implement a good fraud program. How can they implement controls? What motivates folks to do this type of commit this type of fraud, and then specifically around the procure to pay cycle. So next, let's take a look at how technology can help, because you mentioned that a few times. So we did include a session about data-driven decisions, because right now the data is the buzz, right? It's growing. We have data on everything, whether it's on our social media or our enterprise systems, where we have the most important information for our business reside. So how can you apply better decision making? And that's what I'll talk a little bit about and share some examples of how we work with Prashant and folks like him. Prashant mentioned that there's quite a bit of controls that are available out there to implement. Three-way match, for example, something you can see. There's payment tracking, and you all might be surprised that you may have invested in these costly, expensive ERP system, top of the line tier 1 systems like Oracle, SAP, Microsoft, Workday, etc., which are all the systems, by the way, we support. So what's our role in this process if they have all these controls in place? Well, it turns out what experience has taught us that even with all those controls, there's still $1 trillion plus loss every year around the most important companies in the world that are audited. So what does SafePaaS bring to the table? So what we bring to the table essentially is this insight, or what we call advanced analytics, that I mentioned in the introduction, right? So I'll pick on a couple of examples that Prashant just talked about, like last minute purchase orders, right? So being able to push through the purchase orders that go outside of your standard approval process. So typically what we see there is what we call split POs, and there's an example of that here. Right, so split purchase orders are when you're trying to override your authority approval hierarchy. For example, in an ERP system, you're only allowed to process purchase order below $5,000, but the last day of the month you process, 3 different purchase orders for $4,500, and they all go through because they're technically below your approval authority, and you buy something that you're not authorized to buy. So that's one way, procure to pay errors and mistakes as well as fraud occurs. Applying discounts on your order to cash cycle, right? Being able to apply discounts that you're not authorized to apply. Bank account changes. We talked a little bit about bank accounts, and so master data audit trail. It could also be credit changes on the customer side. So basically what we're talking about is the fuzzy logic, because these ERP systems are really well designed as long as they're configured properly, that they should not break down. But the fact that they have so many configuration options and so much data of our entire enterprise data is flowing through these systems, it also makes it more complex, because now you got to track, for example, three-way match, make sure that that control that you're relying on is actually effective and working, and somebody didn't change the configuration. The same token, some people have lots of access. There's hundreds, sometimes thousands of users that our clients have in these ERP systems. So knowing who has access to cause a fraud event, like changing their bank account to match a supplier bank account. In other words, getting payment routed to to themselves. So there are many fuzzy logic examples where the ERP system, with all its good intentions, is not able to control, and for good reasons, wasn't built for control. It was built for efficiency and speed of transactions in your business. So how do we work with these ERP systems? When we sit down with folks like Prashant and his clients, we will say, okay, well, what are some of your business risks you've identified through your fraud program, through your overall audit management program? And we'll hear things like business risk is incorrect vendor payments, or we have a control objective that we only want to pay valid, verified invoice or invoices that are approved based on purchase orders. Or we want to avoid duplicate payments through continuous monitoring. So the way you would configure SafePaaS is to define these controls through what we call our controls catalog and bring the decision from a data perspective, because now that we are scanning this data in your ERP system or other data sources as required, we can then find this so-called needle in the haystack to identify incidents where, through our fuzzy logic and other methodologies, we can identify payments that just don't appear to be kosher, right? So we'll put those payments on hold in your ERP system if you're using the technology from SafePaaS, and that significantly reduces the manual controls. So one of the things that Prashant, you said earlier, was around how when companies are downsizing or have reduction of workforce, you also lose some controls. And that's a very interesting point, because if they're manual controls and the control owner is no longer there, who knows who's watching the shop, as they say, right? So with this approach, those controls remain effective, their technology, they're monitored, and workflow incidents are being used to leverage. We applied this methodology for an organization in the state of Pennsylvania, and they saved over $28 million, almost $30 million in the very first year they implemented the solution with SafePaaS. So this is an excellent example of how you can get prepared for fraud risk and yet leverage the existing controls you already may have in your procure to pay cycle and automate them to save some money right now. Now, what we're really excited about at SafePaaS is this data science area that's emerging, where we can not only identify fuzzy logic with similar invoice numbers, payment dates, and so forth, but we can also find, through machine learning and AI-enabled algorithms, find many other hidden layers. For example, I mentioned earlier that the bank account of a supplier matches a bank account of an employee. They may be in two different systems. You may have Workday or SAP for HR and Oracle or JD Edwards for your payment system. So you could look across multiple areas. And the way machine learns is that it also then picks up and looks for similar patterns across other business units, organizations, ledgers, types of transactions, and so forth to find similar links, and really paints the picture that is not possible for humans to see with a naked eye, right? So this is where we add value and solve problems in procure to pay cycle, fraud problems which have not been able to be solved before the advent of this type of technology on big data and decision making. So as a result, we're able to then present to you answers like that Abbott Labs, in this example, submitted 2 invoices. One was a manual invoice entry, one was the invoice that was sent through an EDI process, and they both got paid. They were at the same amount and the same date within the same operating unit. So these are the types of problems we can solve that your ERP system and manual testing is unable to solve. And this is how the return on investment is justified around the business drivers for fraud controls. So how does that work? Let's talk about identifying those hidden risks that are out in your systems. So the first thing we do is we take a look at, with a tool called Data Probe, we connect to your ERP system and we look at your database schema, we look at change records in there, we look at user events that are occurring, like users getting access to certain sensitive areas of the business, purchasing, bank accounts, things like that. We look at APIs on how data is flowing in and out of your system, the security model, which includes users, roles, privileges, menus, depends on the ERP system. Any data groups that segregate the data, are they operating effectively? So all this data is mined through SafePaaS using our tool called Data Probe, which is a ETL tool. ETL stands for extract, transform, and load. So that loads the information for experts like Prashant and his team to then look at and identify. So we call that a data source. You can have a typical organization these days have 5+ data sources. So it's about connecting those dots and finding those hidden layers. And then once we have this information, we can start by looking at a set of rules or principles that make up your audit plan or your tolerance level for the risk, as we heard earlier. So for example, you don't want to have split POs. That's one of the risks you've identified. You don't want to allow duplicate payments, of course, payments within 90% similar. And also you want to improve your procurement process, because we also find that sometimes ERP, the reason people are working around the ERP or outside is because there are too many bottlenecks. You lose information between a purchasing system and a payment system and the banking system. So there may also be some gaps or bottlenecks that are causing new opportunities for risk, as Prashant spoke earlier. So the fact that we've been doing this for a long time with lots of customers around the world, we have created a catalog of controls, which I'll briefly share with you. So we'll sit down with you and your experts like Prashant to pick out a few controls. As a matter of fact, Prashant and I are working with a large company in Middle East right now, where we've identified an improvement area within the procure to pay cycle, and we've picked 5 of these procurement controls that we will next go ahead and apply against the ERP system and do what we call data discovery or risk discovery. And this basically looks at those rules you have picked and applies that dynamically to the enterprise system where the data resides, system or systems. And the beauty of this approach is that it's all metadata driven. What that means to you is you never have to write a single line of code. So people that are experts in fraud detection, fraud prevention, folks like Prashant, as well as business users like finance, procurement, and management in general, can do this analysis themselves, because it's a tough thing to do for technical folks on their own without good direction, and the time it takes to build, an internal solution, typically takes 5+ years to come together by the time it's fully operational. So for many customers, they leave the process manual because of the cost and effort involved in really automating every single thing. So because, for example, if I just take an example of Oracle, there's 6,000+ base tables in Oracle R12. And so for somebody to really analyze all those tables, identify which tables actually represent risk, will take you a very long time. We have done all that hard work for you. So we've done the heavy lifting. What you get is nice business objects. So for example, supplier an object, invoice an object. Now we know in supplier, for example, in a typical ERP system, that data is scattered over 10 different tables. So we have solved that problem. By solving that problem, you can do data discovery and really focus on tweaking that data by, for example, looking at supplier names that are 90% similar or 95% similar, right? So you might get Acme Electric, Acme, Electric, identify that is the error that somebody made, or they had a malfeasance to perform fraud, and you can catch that before the money leaves the bank. In addition, you have additional risk analysis capabilities, like applying some risk management methodologies that we didn't get a time to cover today, but there are special methodologies that are used by fraud experts and certified fraud experts that help you quickly identify that risk. They're difficult to do as the data is growing, but they're very reliable, like Benford analysis, regression analysis of various types, that gives you an idea of what's my typical threshold of the type of procure to pay invoices I receive versus something that's outside of that threshold. So all that can then be done by experts as well as your typical management team members to identify areas to implement controls and optimize the process, which of course leads to reduction in waste and fraud and losses. And ultimately, this becomes part of your quantitative measures. And any company that has multiple locations, departments, which is most of our customers, if not all, have a challenge with that, because my traditional customer has a shared service center. they think they're supporting the customer, business users in a perfect way. Business user says they're not getting the reports they want, or they have other issues. So by having this quantitative measure, it helps folks that are the experts like Prashant to support their conclusions and their recommendations by giving the same set of truth to management, to IT, to finance, to audit, so they can all take actions as a team and collaborate, as opposed to pointing fingers at each other's silos, right? Which is where a lot of these initiatives have failed and fraud continues. So by giving the quantitative analysis and reporting, everybody's on the same sheet of music, as they say here. And then finally, you can simulate the solution. So instead of actually going in and responding to the risk straight away and changing your ERP system or changing the process, you can actually try to simulate that and see if that simulation improves the results. For example, if you have a procurement manager role established where that role enables a user, grants them the privileges to create a supplier and pay that supplier, you may want to consider changing that role by restricting their access to create a supplier, or maybe move the payment to the AP department for payments and limit that access. That whole process can be simulated without impacting any users within SafePaaS, so that you can get your approvals and sign-offs, and by the time you deploy into your ERP system, it's fully secured and operational without the ongoing costly break fix that goes on in organizations that support ERP systems. Okay, so that's sort of the approach on how we find identified risk through data sciences. I've included a few examples just to bring that to light on where you can start today. So if you are interested in setting up a fraud program and automating that, we will start by giving you a list of 300 plus access rules across all your key processes, like entering journal, posting journals, where you can reverse journal entries, for example. We can give you a list of configurations that are documented in your design documents of your ERP system. We can compare those against the catalog of 500 plus configurations we have, for example, journal authorization limits, payment adjustments, and so forth, and identify where you can immediately get value by finding gaps in your current process controls within the ERP system. So if you don't have the right level of authorization, maybe there's a risk that somebody could process a journal entry and reverse a liability and hide that in the books after they've fraudulently taken the money out of the company. If you miss the first two levels in your process, in other words, your configuration, your access to the users is not corrected, for the purchasing managers can pay suppliers and create suppliers, and your authorization limits or three-way match is not configured correctly. So now what do? There's still a third line of defense we offer, which is actually looking at the transactions to see if that risk has really materialized or is just a potential risk. And of course, if it's materialized, you would investigate and move forward with the tools analysis that we provide. For example, have we actually paid an invoice over a threshold value that is usually acceptable based on the three-way match and the goods received, as this example shows. So with that, I'm just going to wrap it up by giving you a very brief case study, and would like you guys to reach out to us. If you have any questions, please post those in the chat box. This would be a good time so Prashant and I can take those in the last minute or two. So as I mentioned at the beginning of the presentation, I've included a case study of a client that I worked with in New York, and some of the challenges that Broadridge has were just basically weak detective controls in their procure to pay cycle. They were doing most of the stuff manually, as we discussed earlier. It was a very time-consuming manual process. It was also reactive, so they were losing, there were losses that were recorded in the books, and they brought us in to take a look at it and apply a quantitative approach on top of their existing qualitative approach. And some of the testing, for example, three-way match was not automated. So we helped them improve their transaction monitoring process using SafePaaS by 40% of identifying those suspicious transactions that were missing, which led to significant amount of financial benefits, which I'm not at liberty to disclose in public, but it was a significant benefit. Let me just say that it more than paid for the services and products for the next 3 years. And then on top of that, we were able to put 100% hold on or in other words, prevent those suspicious transactions. So the auditor's workload actually went down because instead of outsourcing to recovery auditors, which are charging them 30% for anything they recovered, they were able to bring that in-house, and that was an additional source of savings. They also automated the access provisioning process, the configuration change management process, and transaction monitoring process across significant business cycles. And this is how they do it. So fraud protection requires more than policies and procedures. So one of the things that we have learned in the market is that fraud's been around for a long time. Cyber security, cyber crime is increasing that, and we heard some really good examples from our guest speaker today about how that is actually getting how's that actually happening or getting executed. You require a good plan, and I think we made that really clear earlier, so I'm just summarizing or reiterating those points. Detecting users that have authorized access. So unauthorized access is a common problem, and this is what one of the objectives this company had for us, is to go look for access they had just slipped through the cracks. In other words, the provisioning process was not very robust. They also needed some compensating controls for smaller business units where they did have people that could create supplier and pay supplier, just an example here. And they wanted to say, okay, if we have that situation, well, how do we compensate for that? So one idea was that anytime the same person creates a supplier and pays a supplier, the alert goes to the head of procurement and the controller to review and see if that was authorized or not authorized, and the auditors get a review of that as well. So they were able to put a compensating control where they couldn't mitigate the risk. And then we came up with a number of remediation capabilities where audit, IT, and business could come together and really collaborate on what should be the right level of control. As we heard earlier, it's a tolerance level that ultimately comes from the board down on what is our risk tolerance level in this organization. And then finally, improving their provisioning process. So once we solve these problems, they remain solved and their configurations remain accurate. So being able to put more monitoring controls using the SafePaaS capabilities. And so this is what it looks like. This is obviously not their exact screens, but gives you an idea of what the system does for them. So in terms of financial fraud controls, we're able to pick from those objects that I just talked about. You can see those under my on my screen on the left side, journal sources. This is where most of the journal entries come in. So if the sources change, that can impact, again, many different tables and setups. That's all the hard work is done for you. So we can track changes, journal category, journal sources. Down here on payables, looking at invoices over a certain amount, duplicate vendors, things that are outside of sequence, anomalies or duplicate vendors. So all of that information, including duplicate invoices, vendors, supplier tracking, bank account changes. So all that information is reported in your dashboard on a daily basis if you like, or as frequently as you like. You choose your frequency here. And then you can start monitoring this information. If there is a risk incident that's outside your threshold level, you will receive an approval workflow to either accept that risk or remediate or respond to that risk through the methods that are appropriate for your role. And then you also have a dashboard that senior management can see on a daily basis on how are we doing with our user access, with level of risk we have, and how is that risk getting reduced as we're continuously improving our controls. So as you take snapshots on different times during a life cycle of your risk audit plan, it's really a process rather than a project, right? So once you enable all that, these are good practices you put into your business and the process. So you can monitor now how you're benefiting, and that's where the return on investment comes in. It's easy to set up. So it takes us, once we get access to the client environment, it takes us about a day to configure everything. So it's not like a long drawn out ERP project. Basically, we set up a connection. I won't have time to go in technical detail, but that's our data source, as I mentioned earlier. So this is how it's done through our tool called Data Probe. Once it's set up, you can download the objects that are in scope for your audit. And again, business users can do that. Consultants like Prashant can help you do that. So, you can, for example, look at payable setups. There are hundreds of parameters in setups, but just by doing point and click, you can enable that control as one of the managed objects. And then immediately you can start getting snapshots of that object. So what the values, how are they changing? For example, looks like here somebody has changed allow force approval is set to no. It was now changed to yes. So that's a definite risk. Different people can be notified if that risk occurs through our people tab. So this continuous monitoring is a closed loop monitoring. It's not just annoying you with lots of alerts. It's actually telling you to take action and then closing that. So for example, in an ERP system, if somebody has changed this setup, which is one of the 1,000 setups that you can possibly change, and that's where a lot of the risks creeps into these complex ERP systems, you will actually get that notification that I showed you in the previous screen, as well as a alert right on the message screen, if you like, through personalizations. And then an owner of that control would receive a notification that, hey, there's a risk that has just occurred. Somebody's changed that parameter. You need to review and either approve that change or reject it. And that's how they move forward with continuous monitoring. And then there's a log that auditors and internal and external can draw upon and see, okay, what are we doing? Who is approving what risks? And have they approved a risk that could have been catastrophic or can impact our business? So there's that level of defense that Prashant talked about, the third level of defense with internal audit, looking after how the controls are operating effectively and then making that available to external audit to provide final opinions on financial statements, fraud risk, etc., to senior management and the audit committee. So you've got the whole package here. You basically point and click, select the controls you want. It doesn't have to be a big bang. You can start with 5 controls, 10 controls. You can access this through the cloud, so it's all SOC 1 certified platform that you can connect into your ERP system. Only grab the data that represents evidence, so we don't need your complete invoices and suppliers like the older tools used to do back in the day, 20 years ago when I started in this business. We have learned from previous experiences and improved and polished the capability, so it's much more user-driven, user-friendly, as they say, and you're able to get more effective decisions and actionable insight out of this system. So with that, Emma, I think we're going to turn it over to you, see if there's any questions, and we can wrap it up. Thank you, everybody.
Yes, we have had a couple of questions come in. In an organization, where should the responsibility of fraud risk assessment ownership lie? With the risk management department or internal audit?
Okay. The simple answer to that would be it should lie with the risk management department, and internal audit then would test the effectiveness of the risk assessment process. Now, as I was explaining, and I would believe many of the internal auditors, chief internal auditors would face the same challenge, is when it comes to discussing the sensitivity surrounding the fraud risks, especially when it comes to likelihood of the fraud risk taking place. That is where the challenge comes to have that dialogue with management and agreeing upon the assessment results of the fraud risk. So it is important then to basically have that ethical culture in place for the various stakeholders to participate in that discussion when it comes to the assessment of fraud risk. And I would then put together that everybody then becomes responsible to assess that risk and bring it to the table for monitoring and reporting purposes.
Okay, thank you. Can the SafePaaS system identify false positives, or does that require human intervention? And if it does, if the organization is large, how do the internal auditors address those false positives?
Okay, I'll take that one. So the great question around false positives, and reliance on our system is critical for you to be able to trust the information we produce. So we spend a lot of time looking at those false positives, give you some tools to mitigate and remove those false positives. False positives, by the way, happen in any exception management system like the fraud management system. So they're normal occurrences, and again, the person asking the question clearly has experience with such systems. So we provide you 2 types of false positives. There's the global false positives, which just occur because of the data itself. For example, you have undated users, you can't remove those users, and so there may be transactions tied to them that appear suspicious because let's say you have a purchase order that's still a pending approval, but the person has been terminated or has left the company and their access has been terminated. So that would be a red flag that our system would produce. But then when you go in and mark a filter, a global filter saying that don't show me end users that are terminated and have no access, and that's a false positive, a common false positive. So you can put that in SafePaaS at a global level. You can also look at patterns at the local level. So you may have certain exceptions, like there's interfaces that are flowing in to your general ledger to, let's say I worked with a company that was one of the largest car rental companies. So they have a car rental interface that comes in, and some of those transactions go straight in GL, and they bypass the approval workflow. So that's an example of a localized false positive, which somebody might look at and say, well, why didn't the journal entries go through approval? Well, they're getting reviewed a different way, so they're coming in through an interface. There's no human being involved in touching those transactions. On the other hand, if the interface fails, we turn on the monitoring right away, so that any manual intervention or entries that might have come in when the interface failed and somebody actually went to correct it, we do want to monitor that. So it can get pretty sophisticated, just depends on the company and how they've implemented systems. So that's kind of the short answer, but we'd love to show you more detail in our solution if you're interested. So thanks, Prashant. I know we're top of the hour here, and it's late for you in Dubai today, so thanks for joining the session that was geared toward the US market at 11 Central here. We appreciate it. Emma, back to you.
Yes, just want to thank you, thank everyone for joining us today. Big thank you to Adil as always, and our guest speaker, Prashant, a big thank you to you. You can find further information on our website, of course, and you can also follow us on LinkedIn and Twitter for more updates. So please feel free to reach out to myself. I'm Emma here at SafePaaS if you do wish to set up a demo. So have a great evening, afternoon, morning, wherever you are, and we'll see you hopefully again next month. Thank you, everybody, and bye-bye.
Thank you.